Good morning, everybody. Mike Vacchi, Princetontrader.com, here for ntmarkets.com with your Wednesday morning pre-market webcast. Okay, today's a Fed day. We just had the ADP report come out. It was 119,000. They were looking for 155,000. And, of course, we go do new highs. So we printed as high as 95.5. And it's kind of, it just kind of expands on what I talked about yesterday. There's no reason for us to expect this market is going to do anything but reach for that upper band and go through that upper band before it reverses itself and goes back down to the lower band. And that area now is looking anywhere from 1603 to 1605, 1606 in order to get a sufficient breach of that band to get people thinking about a reversal. Now, I say thinking about a reversal because I want to make myself clear. What I'm not saying is this. I'm certainly not saying anticipatorily get short a move to the upper band. Why would you do that? You will end up underwater. The other thing I'm not saying is the minute we touch the upper band, take every contract you can possibly find and throw it at the market short. Don't do that. It could do what it did last time, which was get up to this third standard deviation band. Now, we touch the third standard deviation band, I'm going to tell you to sell and come back in a couple of days and take your money, because that's how third standard deviation Bollinger Bands work. But we're way, way far away from that conversation. Let's just look at what we have in front of us. We have a market that likes to touch the upper band. We're not there yet. We are there from 1603 to 1606. We have a Fed day. It's going to be very volatile. I would not put a lot on in either direction, because I'll tell you right now, if Bernanke comes out, the Fed comes out today and says something that the market doesn't like, the market is going to care less where the upper band is. It's going to reverse, and we'll be back at the middle band before you know it. So this morning is not the time to be making big bets on the market. This morning is a time to kind of observe what's going on, get yourself squared away for the Fed. Don't game the Fed. You don't run $50 billion. Don't game the Fed. I would imagine that 99% of the people that I'm talking to are individual traders. Okay? And that's who I try to gear the webcast for. You're an individual trader. Your job is to let these big events happen, see what the reaction to those big events are, and then either fade the initial pop after a range has been established, or ride that reaction to victory. Okay? And none of that happens until after the news comes out. So, no big bets ahead of the Fed. Okay. And don't forget, we've got ISM is today, 10 o'clock. Construction spending. Tomorrow you've got Challenger job cuts. ECB is out tomorrow. Jobless claims, of course, and then Friday is the Fed with ISM services and factory orders. So this is a big economic week. This is a big economic week, and you've got that cross current of bad news being good for the Fed, or good news being, too much, or good news just being good news about the economy. It seems that the bulls can spin either good news or bad news in their favor. So you have to understand that when you're a short, you are counter trend, and you need to act accordingly, which means keep a reasonable stop on and take profits when you find them. Okay, everybody, have a fantastic day. Mike Vacchi, Princetontrader.com, here for ntmarkets.com. I'll be back tomorrow morning with another webcast. Trade them well, everybody.